Welcome back to a brand new video about the housing market in Orange County. Today we're discussing how home values just hit another record high, and we're going to be doing a deep dive into the market, looking at days on market, active listings, median sales price, investor activity, how many investors are purchasing, are more investors buying compared to selling, how many cash purchases are currently happening in this market, as well as taking a look at a bunch of other metrics. If you're new to the channel, my name's Ian Phillips. I'm a realtor in Orange County. I developed this platform called the Market Vector, link in the description below. There's a lot of free information on here. You can track every single housing market in Southern California. More will be added in the future. And there's pretty much every single real estate data set that you can think of in all the cities. If you just want monthly reports, you can type in your email address and get a monthly report automatically sent to you every month when I update the data. Let's get straight into the video. So today, Orange County, just go to the search bar, type in Orange County. And immediately we get all of this housing data. We'll take a look at some graphs as well, kind of see where things could be going based on where things have been for the last few years. So the median sales price is a little under $1.23 million now, and that is up 8% year over year. Primarily, this is driven by active listings, which is now sitting at a little under 5,000 homes available for sale, and this is down 14% year over year. So we are kind of seeing inventory remain below the historical average, which, by the way, is around 6,000 homes on the market. And when you have demand in a market where inventory is down, well, that likely means prices are going up. And pending sales are down 17% year over year, but the number of homes sold is actually only down 1%. So this pending sales is a bit of a leading indicator as to what could happen in the second half of this year. Typically, market activity slows down a little bit, buyers take a step back, and active listings do also usually decline in the second half of the year, so they kind of balance each other out. But homes sold is the current metric, and that is only down 1% year over year. When active listings are down 14%, it makes sense why the median sales price is up 8%. Days on market, on average, taking about 27 days for a home in Orange County to get into escrow. Still considered a seller's market. Let's take a look at some of the market health metrics, such as cash purchases and price cuts, month supply of inventory. So almost 20% of the homes purchased in Orange County are actually purchased with cash. So that means there are a lot of wealthy people here continuing to buy homes. And when you look at investor purchases, slightly under that, so roughly 16.5% of the homes sold in Orange County are bought by investors. So that is very interesting to consider. And just investor buying pressure, this stat kind of determines, are more investors buying compared to selling? And basically this means that there are 67% more investors buying homes compared to investors that are selling homes. So important to track that in the markets that you are interested in. By the way, if you are interested in checking out this platform, it's themarketvector.com, link in the description below. And if you're looking for a specific city in Orange County, you can just go here, go to the search menu, type in, say, Irvine, for example, and it will also give you all of this data for every city in the county. But let's get back to Orange County. So price cuts, roughly 25% of homes in Orange County are having price reductions. That's quite a large percentage, actually. Demand rate, 36%. So this means 36% of all the homes that listed are being purchased. Month supply of inventory. We'll take a look at the graph on this one because it's pretty important to see exactly what's happening with this statistic. And it's kind of like how many homes are on the market versus how much demand there is in the market. So this number basically means that if no homes hit the market in Orange County for the next 2.8 months, there would be no homes available for sale anymore. Median rent actually down 3% year over year. Listings for rent up 12% year over year. So you can see how the median price of an item is obviously affected by the quantity of it available. So the median sales price is up while active listings are down. Median rent is down while listings for rent are actually up 12%. Foreclosures, there's hardly any happening in Orange County, only 12 foreclosures being filed. And then further down, we have economic indicators, household income, unemployment rate, down 14% year over year. Pretty impressive, considering California as a whole is, I think, around 5.5%. So let's take a look at some of the graphs over here. I want to take a look at months supply of inventory. And let's see what's been happening for the last 5 years. So it has been on a steady uptrend kind of since, well, really since 2021. And potentially going on an increase into the end of the year. Now, if that does occur, that would mean demand is declining more than available homes for sale, which we did see pending sales actually down substantially year over year, even more so than active listings. And we can take a look at that metric right now. Pending sales. Yep, pending sales are declining into the end of the year. A pretty decent drop compared to last month. Roughly 300 fewer homes got into escrow compared to the previous month. Now, this decline is actually a little more apparent and earlier than the previous years. You can see it typically starts to decline in September, October, and continues going down into the end of the year. Same with all of these previous years. August, the decline started in August into September. Even in 2024, from October into November. So this drop in pending sales or buyer demand, so remember it's the number of homes that are currently in escrow, has declined. Now this could just be a temporary blip in the data. If it continues next month, I will of course update you and say this is not a temporary blip in the data, because the reason I think it could be temporary is when you look at homes sold, this is actually still relatively high. You can see from the previous month, it only dropped by about 80 homes getting purchased. Remember, homes sold are in fact the number of homes that officially closed, transferred title. So this is also an indicator of buyer demand because these are officially homes that buyers have purchased. Now, pending sales are, of course, a bit of a leading indicator. If pending sales are continuing to decline this drastically into the end of the year, homes sold will likely also be declining. Now, just out of curiosity, we can kind of compare what's happening in. We can see how these metrics play around with each other. So when you look at pending sales, which is this dotted pink line here, once it starts to decline, homes sold also start to decline. In fact, even going back to 2022, you can see pending sales went from 2,600 down to 2,200, and then homes sold started to decline as well. So this is actually a pretty good leading indicator set of data to show us that demand is probably tapering off into the second half of the year, and perhaps if inventory remains the same, we might start getting price reductions to be a little higher. When you look at price cuts, we can remove pending sales. When you look at price cuts, 25% versus 21% in February, perhaps this number starts to increase a little more into the end of the year if homes sold declines along with pending sales. So let's take a look at active listings. We can see this has been on a steady increase since the start of the year. December, we had 3,580 homes on the market, now a little under 5,000. We'll have to see how this reacts into the end of the year. Typically, it does start to slow down. You can see last year in July of 2025, there were almost 6,000 homes on the market, getting back to the historical average that we like to see if we go back 10 years. You can kind of see, pre-COVID, around 2020, homes were hovering around the 5,500, and then pre-COVID 2019, homes were, bouncing between 44,000 on a very low number to 7,900. So kind of that average around 6,000. So we were actually almost there. And then active listings just plummeted into the end of the year, which is what caused home values to rise month over month as soon as 2026 started. You can see going back all the way to 3,600 active listings, down from almost 6,000. That is a pretty substantial drop. And we'll take a look at median sales price. Just go over for the last 5 years. Pretty steady rise. We'll smooth this out a little bit, go to a 3-month average. Pretty steady rise since the year started. You can see in December, median home value was basically $100,000 less than it is right now. Started the year at $1,118,000. Now where we are in June, $1,225,000. This is a 3-month average. $1,229,000. So that's kind of it for the housing market update in Orange County. Saw a lot of the investor metrics, exactly what's going on here. If you are interested in signing up for themarketvector.com, you can create an account. There is a free version. Premium version is $12 a month if you want to test it out, or $99 a year. And I think a huge value for this, if you just want to type in a city, get a monthly report sent to you every month. You can type in as many cities as you want, or you can do a county report, and this will also send you basic information about every city in that county, or you can just go here, download it, type in your email here to receive those monthly reports. But that's it for now. If you're looking for a realtor in Orange County, feel free to contact me. My contact information is in the description below, and I will see you in the next video.